everyone, I am CA Vibhuti Narang. Welcome to our channel VN Practical Destination. In today's video, I'll be talking about a very important part of GST, which is input tax credit, also known as ITC. ITC is very important due to the reason that if any input is taken wrongly by the party, then there can be a huge amount of penalty or fine involved in this. So there are various things which need to be understand, like what is input tax, what is input tax credit, what are the classifications of these inputs, then in what time period the input can be availed, and in last what are the in items or services on which we cannot avail the input. So let's begin with the video. Let's first understand what is the meaning of input tax. So any tax which is charged on purchases, which includes your CGST, SGST, UTGST, IGST, as well as if you had paid tax on any reverse charge or IGST on import of goods. So all these taxes charged on purchases combined together is known as input tax. It will not include the taxes paid on the composition scheme. Now we need to understand what is input tax credit. Input tax credit is the tax paid by the businesses on purchases that is used to reduce its tax liability on sales. It means that the output GST, which is the tax charged on sales, the input tax is able to get reduced. Means we should understand that amount of input which helps us reduce the output tax liability is known as input tax credit. See, we can get input on all our purchases, but sometime on some services the input is blocked. So the eligible ITC, which helps us to offset from our output GST, is known as input tax credit. Now we need to understand this through an example. See, there is a person A who supply goods of rupees 500 to B. Now A is the seller and B is the receiver. When in the books of A, when we prepare the computation, we find that the taxable value is 500, and I have assumed that CGST and SGST is 99%. So 9% of 500, 45 rupees, and 9% of 500 is 45 rupees. CGST which A will pay is 45, and SGST which A will pay is again 45. Now when the goods are supplied to B, B further supplies these goods with 40% addition, means the profit margin B is earning while selling to the consumer is 40%. Now 40% on the basic value on which it has purchased, which is 500. So 500 plus 40% is 700, and again 99%, 63. Now the goods purchased by B from A become the purchases, means the tax paid on his purchases or expenses, which is 45 rupees. Now this 45 rupees is the input tax credit which B will avail while supplying goods to the consumer C. Now what is the GST payable by B is 18 rupees and 18 rupees, that is output minus input. So this is the basic concept that what is input tax credit is all about. Now we need to understand what is the classification of inputs. Inputs under GST are classified under three types. One is in itself input, second is capital goods, and the third is input service. So any kind of service or any kind of service, like for example any professional service or any technical service, CA service, any kind of service, it can be of internet, advertisement, you are taking, it is being classified under input service. In all the three classifications, just note one thing, that it should be used for furtherance of business. Furtherance of business means to enhance your business, for your increment of business, or for the betterment of the business. The second type is the capital goods. Now capital goods means those goods which are capitalized in books of accounts. Capitalized in books of accounts means that its benefit is availed for more than 1 year. Whenever we book any expense, its benefit is taken in the same year, but the capital goods are of nature whose benefits is taken from more than 1 year. And if any input which is not classified into input service or capital goods, then it is being classified as input. It can be your goods purchased for the sale purpose or any raw material, any other thing which is not categorized under capital goods or input service, it will come under the head inputs. So this was the basic classification, that how the inputs will be classified under GST. Next thing which we need to understand is what are the conditions which we need to take into mind for taking ITC. I have made it very simple. The person in the left is the seller and the person in the right who is receiving the goods is the buyer. The first condition is that the buyer should have a tax invoice or a debit note. So to avail ITC, the foremost condition in the hands of the buyer is that he should be having the tax invoice in his hand for availing the input tax credit. The second condition is that the goods should actually be received by the buyer. Means the receipt of goods in the hands of buyers is very much mandatory. The third condition is that the seller has paid the tax in cash or credit, means the output GST is being paid by the seller. The fourth condition is that the return is filed by the buyer, means the buyer has availed the input and for that input the return is filed by the buyer. The fifth condition is to be understood with the help of an example. Let's suppose this is a consumer and he or she wants to purchase goods from a factory. Now she wants to order, let's suppose 10,000 kgs of raw material from the factory. Now the person who is delivering the goods or the seller is not able to deliver all the goods in one go. Let's suppose the factory person delivered 5,000 kgs in the first lot, then 2,000 kgs in the second lot. Now total 7,000 kgs delivered. In the third lot, let's suppose 1,000 kgs, 8,000 kgs delivered, and in the final fourth lot, he is delivering the rest or the remaining 2,000 kgs. So how the input is to be availed in such case? The input is available when the last lot is received by the buyer. So input is available at the time of receipt of last lot for the whole purchase. Means when the first lot was delivered for 5,000, input was not available, not at the time of second lot, not at the time of third lot, but at the time when the last installment or the last lot is received by the buyer. The sixth condition is that the depreciation, whenever we are booking a capital goods in our books of accounts and we are charging the cost price of the capital good is actual price plus GST, then your input tax credit is not available. Means if you are including the cost price, in the cost price the GST component is included, your ITC will not be available. But if the actual price of the capital good is the cost price of your capital good, then you can avail the ITC. So GST component for availment of ITC will not be available. So you need to charge the depreciation only on the cost price so that you can avail input tax credit under GST. The next important thing is the last date of taking input. Let's suppose I have in my case an invoice which is being generated on 1st of November 2019. If I talk about the financial year 1920, it will end on 31st of March 2020. The financial year will close on 31st March 2020. Now the last date of taking input is not the invoice date. It is the September return of the next financial year or the annual return filing for that financial year. Means if the September return for 2020 is filed and the annual return for the financial year 1920, whichever is earlier. As of now, the September return is being filed not on a single date 20, it depends upon your turnover and states the different dates are 20, 22nd and 24th of October. And if suppose the annual return is filed prior to this date, then the last date will be the prior date of taking the at the time of filing your annual return. And if annual return is filed after September return, then you need to avail input by maximum by your September return of the next financial year. Let's suppose The invoice was generated on 1st of November 2019. The payment by the buyer to the seller is to be made within 180 days of the invoice. Now mind it very carefully that it is 180 days from the invoice date plus 180 days. If the payment is not done between this time period, then you need to reverse the input. The buyer needs to reverse the input availed by the buyer after 180 days are being lapsed. And after, let's suppose after lapsing of 180 days, after 2-3 months the actual payment is done, means after 200 days 300 days the payment is done, then he can avail the credit. In this, when we reverse the ITC, means we add back in our output tax liability, we need to also pay interest at the rate of 18% per annum. Now this interest is to be calculated from the date of taking input. And we know that the second condition was that the buyer must actually receive the goods. So the date for calculation of interest is not from the date of invoice, it is from the date of receipt of goods, because you actually receive the goods after the invoice, and the date of taking input is the receipt of goods date. So from the receipt of goods date to the return filing period, means it will be again more than 180 days, because after 180 days, the month in which the 180 days are expired, that month's return filing date, let's suppose the 180 days expired in July, so the July return is filed on 20, 22nd or 24 depending upon the case of August. So till that return filing date, your interest at the rate 18% is to be calculated. So this was the basic part about input tax credit. Now we need to understand what are the services on which the ITC is not available. I have made it or grouped it among the similar type of services. So I'll just explain you for all. First is food and beverages. So if you are providing a service related to foods and beverages, then ITC is not available. Similarly, outdoor catering, beauty treatment, health services, cosmetic and plastic surgery, in these things the input is not available, but it is available if it is rendered for the same type of service. Let's suppose the outdoor catering person is providing service to another outdoor catering person, then the seller can, then the buyer who is receiving the service from the another outdoor catering person can avail the ITC. Otherwise, if this service is provided to any other person, then the buyer cannot avail the input. Next is if you have any club membership, health membership, fitness membership and the leave travel concession of employees, then also ITC is not available, or you can say it is blocked. Then the next is rent a cab service, life insurance service and health insurance service. In these three cases, the ITC is available, first as discussed earlier, if it is rendered for the same type of service. Secondly, if it is being made mandatory or obligatory by the government for the employer to provide these services to the employee, then to the employer these ITC for these services will be available, otherwise it is not available. The next is the work contract service. Now in case of work contract service, again it is rendered for the same type of service, then ITC is available. Second is goods and services used for construction of immovable property for own use. In both the cases, means the work contract service as well as goods and services for construction of immovable property for own use, the ITC is available only for construction of plant and machinery. So you can avail ITC in both the cases if it is for the construction of plant and machinery, otherwise the ITC is not available. Next, if you are into a composition scheme or a non-resident taxable person for personal consumption, free samples and fraud cases, then also ITC is again not available. The last one, which is very important, is the ITC on motor vehicles and other conveyance. Motor vehicles and other conveyance I have divided into two types. One is a passenger transport and the other is the goods transport agency. Now passenger transport for transport of passenger and goods transport agency for the transportation of goods from one place to another. In case of goods transport agency, the ITC is 100% available. So if you are purchasing any motor vehicle or other conveyance for the goods transport agency, then your ITC is available. Next, in the first case, the passenger transport, it is further being divided under two categories, that is the passenger transport vehicles up to 13 passengers and the passenger transport for more than 13 passengers. If it is for more than 13 passengers, again your ITC is available. If it is up to 13 passenger, the ITC is not available except for the three services which are mentioned below. The ITC is not available. These three services are of vehicles. Like if you are into supply of vehicles, you have a Maruti showroom and you are purchasing the vehicles for further sale of the vehicles, then ITC is available. The second is transportation of passengers like the Ola Uber services, then also ITC is available. And last is the motor driving training institute. So the person who trains for a motor driving vehicle or any other institute for motor driving training up to 13 passengers, then also your ITC is available. The topic covered in today's video is available on my website. The conceptual part of these topic available on my website vnpracticaldestination.com. In that you can go to course outline, GST part 1, the input tax credit. In this topic all the concepts in detail are again given on this topic. If you want, you can go through these topic in detail for detailed reference. Besides these, I also teach online as well as offline for the practical training of these subjects. So if you want, you can go for the registration of these topics from here also. That's all for today's video. If you like the video, then please press the black thumb below and subscribe to my channel for latest updates. Thank you very much.